Welcome everybody. This is Nikki with Getting Real with Nikki. And today I am going to address a common misconception that many real estate investors, specifically those that are new to the game, have about taxes and using their losses to offset their income. But before I dive into that, let me just define a couple terms for you. First term is ordinary income or ordinary activity. What is it? Ordinary activities are anything that you actively and materially participate in generating the income for that activity. So W-2 income from your job. You go to work every day and you get a paycheck, so you're actively participating in generating that revenue for yourself. If you are a doctor and you have a private practice, you go into the clinic every day and you actively provide service that generates the income for that practice. And so you're actively participating in generating the income for that practice. So businesses that you actively participate in are considered ordinary income. So recap, ordinary income is income from W-2, from a job, or business income in which you actively participate in generating the revenue. Passive activities, on the other hand, passive activities are pretty much anything real estate with a few exceptions. And then any business income that you do not actively participate in. So if you are a silent investor in the gym located down the street, or you helped your cousin start a photography business, but you don't participate in running the business or making the money of the business, you are considered a passive partner. That's a passive activity for you because you are not actively participating in the generation of revenue. So recap on passive activity. Passive is basically anything real estate with a few exceptions, and then any business that you do not actively participate in generating the revenue of. So those are the two terms to start with. So the common misconception that I'm going to explain today is around taxes and using losses to offset income. So many real estate investors think that the losses that they take on their real estate property can be used to offset their ordinary income from their job per se. And that's just not the case, with a few exceptions, because let's get real, in the tax world, there's a tax law and then there's 10 exceptions to it. So in the tax world, there's always an exception, and the answer to a lot of tax questions can be, it depends. But right now, for these purposes today, the misconception that many real estate investors have is that they can use their real estate losses to offset their ordinary W-2 income. And that's just not the case, because ordinary income and passive income cannot cross. They can't mix, and they can't offset each other. So just think of it and remember that ordinary losses can be used to offset ordinary income, and passive losses can be used to offset passive income, but they cannot cross. They can't mix, they can't be intermingled. So it is a common misconception for a lot of new real estate investors that you can use your passive real estate losses to offset your ordinary income, but that is not the case. You cannot use your passive real estate losses to offset your ordinary W-2 income to lessen your overall taxable income. It just doesn't work like that. There are some exceptions, of course, because we are dealing with the tax code and there's always an exception. The answer is usually it depends. But for the most part, just know, as a new real estate investor, please be aware that you won't be able to offset your losses with you won't be able to use your real estate losses to offset your ordinary job income or your ordinary business income. It just doesn't work like that. There are some ways around that, and one way around that would be to get yourself licensed as a real estate professional, because there's a whole different set of tax rules for real estate professionals and offsetting losses against income. But that is a topic for another day, and I could go on and on. But we'll save that one for another day. For today, please know that it is a misconception. You cannot use real estate losses to offset ordinary income. But you can use ordinary losses to offset ordinary income and passive losses to offset passive income, and that you can always carry forward passive and ordinary losses to future years. So if you have income on your real estate property in future years, you can take the losses that you had today and use that to offset future income. And the same goes for ordinary income. You have ordinary losses today, you can use those to offset ordinary income in the future. Thank you so much for listening. I hope this was helpful to you to understand a little bit more about taxes and real estate investing. And please let me know if you have any questions. Please let me know what you think of the video. I look forward to talking to you soon. Stay happy, healthy, and safe. See you later.